Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
A fun little countdown show today. Thanks so much for being here. And we take a look at the top 10 brokerages specifically based on assets under management. Okay, so let's get right to it. When you first start investing, figuring out which brokerage to pick can really be a challenge, to say the least. Sometimes in a misunderstanding of what diversification is, investors open accounts at multiple brokerages. But before you start opening accounts left and right and just willy-nilly, it's worth looking at the biggest brokerage companies and identifying what makes these companies unique. While bigger doesn't necessarily mean better, these companies all have more than $1 trillion in assets under management. With so much money at these brokerages, most seem to be doing something right. But beware, not all of these companies are discount brokerages. Some specialize in workplace retirement plans, and others are full-service brokerages that charge high fees. We want to stay away. These are the top 10 brokerages just based on their assets under management. BlackRock. BlackRock is the country's largest brokerage firm with over $10 trillion in assets under management. BlackRock is famous for its iShares funds, also called SPDR funds, which are some of the lowest cost ETFs available in the market. Robo-advisors rely heavily on BlackRock funds due to the quality of index tracking and the company's low costs. While you can buy iShares through most brokerage companies, BlackRock also allows you to open retirement accounts, brokerage accounts, and 529 accounts. It supports a range of investment options with commission-free trades and low costs on ETFs and mutual funds. Fidelity. Fidelity famously became the first company to offer a no-fee index fund to accompany its already no-commission trading fees and other services that investors love. Even with its myriad of low and no-cost products, Fidelity manages to offer a great website, and it offers services like a robo-advisor and socially oriented investments. Thanks to its focus on low fees and customer service, Fidelity has more than $9.6 trillion in assets under management. Vanguard. Founded by the legendary John Bogle, who was a champion of low-cost investing philosophies, Bogle was a pioneer of low-cost index funds, but Vanguard offers both actively managed and passive index funds. The company, which is headquartered in Valley Forge, Pennsylvania, has over $8 trillion in assets under management. Charles Schwab. Fun to say, and with $7.32 trillion in assets under management, Charles Schwab is a consistent leader for retail investors who want access to low-cost funds, some trading capabilities, insights from leading investors, and great investing technology. The company offers automated investing through intelligent portfolios, socially responsible investment options, and all manner of retirement, education, and brokerage accounts. J.P. Morgan Chase. Within the personal finance community, Chase is known for its incredible credit card rewards and lucrative checking sign-up bonuses. But the company also holds more than $2.8 trillion in assets under management for its clients. While most of J.P. Morgan Chase's products are targeted to high net worth individuals, the company's self-directed investment option offers commission-free trade, retirement accounts, and other perks for investors. Edward Jones. With more than $1.7 trillion in assets under management, Edward Jones Investments is the first company on this list that doesn't actually have a discount component. Investors who choose Edward Jones primarily work through the company's financial advisors who guide investors toward the right mix of investments. Compared to most of the companies we're talking about today, Edward Jones has high fees, and the service you receive varies depending on the quality of your financial advisor. If you're happy with your Edward Jones investment advisor, it might be worth keeping your investments at the company even despite the high fees. However, investors who are less satisfied may want to consider a new financial advisor through Personal Capital or Wealthfront Advisory Services. Moving on to Morgan Stanley E-Trade. Morgan Stanley was another company known for its high-fee, high-touch service, but the company made a bid at the discount market by acquiring E-Trade in late 2020, E-Trade is best known for its low and no-cost trading platform. It gives users the ability to open multiple accounts, including education accounts, retirement accounts, and regular brokerage accounts. The E-Trade Solo 401k account is consistently ranked as a favorite, mostly because of the ease of opening, funding, and transacting in the account. With the acquisition of E-Trade, Morgan Stanley now has $1.6 trillion in assets under management. T. Rowe Price. Founded in 1937, T. Rowe Price is a brokerage with more than $1.3 trillion in assets under management. While the company has pivoted multiple times since its founding, today it is best known for its workplace retirement plans. In general, the funds offered at T. Rowe Price tend to be a bit more expensive than those offered by other brokerages we talked about today. In addition to employer-sponsored retirement plans, T. Rowe Price has the full array: IRAs, SEP IRAs, 529 education savings plans, and individual and joint brokerage accounts. If you've left a job with a T. Rowe Price 401k, you may want to consider lower-cost rollover options before rolling it into a new account at T. Rowe Price. If you want to find out those lower-cost rollover options, you can see the link at thecollegeinvestor.com, and I'll talk more about how you can access all these resources a little bit later today. Now we move on to TIAA. This is the nation's largest administrator of 401(b) plans, which are investment plans for nonprofit and government sector employees. The company has more than $1.3 trillion in assets under management, but it has famously been embroiled in scandals related to its business practices. While the company's most egregious acts have been cleaned up, TIAA products still tend to carry high fees. If you've left a nonprofit or government job, you might want to roll your 401(b) into a rollover IRA rather than leaving it at TIAA. TD Ameritrade. Although TD Ameritrade was acquired by Charles Schwab, it continues to operate as its own excellent, by the way, discount brokerage company. By itself, TD Ameritrade has more than $1 trillion in assets under management, and it consistently ranks as one of the best companies for traders and individual stock investors. The company's Think or Swim trading platform helps traders and investors learn and try strategies before they start executing and potentially losing heaps of money. TD Ameritrade also offers managed portfolios, and it supports most education, retirement, and individual account types. From $10 trillion in assets at BlackRock to $1 trillion at TD Ameritrade. Are bigger brokerages better? When it comes to investment brokerages, scale matters a little bit. In general, we don't recommend apps or brokerages with less than $1 billion in assets because the companies are too likely to be acquired. Mergers and acquisitions tend to lead to decreased quality of customer service, at least during the transition. But once a brokerage reaches a certain size, it can serve the most common investment needs and provide a differentiated experience based on its strengths. Most of the brokerages today offer a mix of low and high cost products, and they do serve a variety of clientele. With that said, I know you might be asking, why isn't my favorite brokerage on this list? So some of our favorite investment companies like Wealthfront and M1 Finance, both of these companies have less than $1 billion in assets under management. Despite their relatively small scale, at least compared to the companies with trillions under management, we do respect these competitors and contenders in the space. If you're interested in finding the best free investing apps, we have an article just for you at thecollegeinvestor.com. It also includes several companies that manage billions rather than trillions in assets. These companies manage to scale using technology, which keeps costs low for investors and also provides a great investment experience too. They're great. Lots of great options for you, and I know it can be a little bit confusing to say the least when you're starting and you're looking for the right brokerage for you and your situation. Please check out all the resources we have at thecollegeinvestor.com. Tons of stuff right there for you. If you copy and paste the title of this podcast right into the search bar, you're going to find this article with all the resources and the companies we talked about today and links to where you need to go to do your own research. We would love to have you be a part of our community on social media. Like us, friend us, all those things. Just search for The College Investor. You'll find us. and we'd love to answer your questions and walk you through this journey. Thanks again for stopping by today, and we'll talk to you again real soon.